Hello and welcome to Vincents July quarterly tax update. My name is Parminder, or I also go by Parm for short. I'm a manager in business advisory team at Vincents. Thank you all for joining me today. So the last few months have been a difficult time, along with a lot of changes that have come in play for all of us. With the start of the new financial year upon us, today's update would focus on some key changes in the new financial year for both individual taxpayers and small businesses. An important message and standard disclaimer: this webinar is for information purposes only, so if you wish to discuss anything further or obtain further information in relation to your situation, please contact us directly. If you have any questions in relation to today's topics or would like further information, my contact details are on this slide, so please feel free to send me an email or give me a call. Today, I'll be discussing ATO updates and reminders for both individuals and small businesses. I also will be touching on payroll tax today as well. So just thought I would start with some interesting facts that the ATO has just released. So more than 457,000 individual refunds has been issued as at 14th of July 2020, totaling more than $1.08 billion, with an average refund being around $2,365, while compared to the same time last year, the ATO had issued 389,000 individual refunds. That's a 68,000 jump, which total more than 879 million, with an average of 2,258. Around about 1.7 million individual lodgements have already been made for the 2020 financial year, which is a 12% increase compared to same time last year. So there are currently two methods that you can claim home office expense due to working from home during the COVID period. So the first one is the actual cost method. To claim a deduction, you must have spent the money. The expense has to be directly related to your earning of income, and you must have recorded a record to provide proof. The expenses that you can claim, the work-related portion of it while working from home, is electricity expenses associated with heating, cooling, and lighting the area from which you are working from, and the running and using the work area. Cleaning costs for the dedicated area, phone and internet expenses, computer consumables, home office equipment. So you can either claim the full cost for each item up to $300 each, or decline in value for items over $300. So the expenses that you cannot claim is coffee, tea, milk, general household items, costs related to the children and their education to set them up for online learning, items that you have been reimbursed by your employer, and the time spent not working, such as homeschooling your children or having a lunch break. To calculate the work-related portion of your actual cost, you need to keep a record of the actual hours you have worked from home, a diary for a 4-week period to show the usual pattern of working at home. You can work out the declining value of your assets over $300. You need to keep your receipts that you have spent on the assets and consumables. You need to show also a percentage of use for work purposes for the assets, as well as also keeping records of your phones and internet plans. To also work out your method for electricity, there are a few that there is a method that you need to go by, and I have listed that out on the slide. Also, you'll need to keep a record of total annual hours used for work-related purposes. So while you're going through this method, you need to also take into account that the other members of your household and their use of the same items or area of the house that you are using. So I won't go into great detail in regards to this slide, the phone internet costs. So there is a few methods that the ATO have released, which I have detailed in the slide for you to review. So if you don't want to use the actual method due to the amount of record keeping that is required, the ATO has announced a temporary method as a result of COVID-19 called the shortcut method. So this method can only be used during the period 1st of March 2020 to 30th of June 2020 for the 2020 financial year. However, this has been extended into the 2021 financial year for the period between 1st of July 2020 to 30th of September 2020. So how it works is you can claim 80 cents per hour that you use for work. Therefore, the only records you need to keep is the hours you've worked from home as evidence of your claim. This amount is inclusive, meaning you can't claim for any of your working from home expenses as listed per the actual method, including the assets that you have purchased during this period. The ATO has advised that they are going to be reviewing some of the costs. So they do understand there's going to be an increase in deductions due to spending money on being able to work from home and also purchasing protective items for work purposes, example gloves and hand sanitizers. However, the ATO also does understand that working from home or having reduced hours or not working at all, they will see that you will have a reduction in expenses like travel expenses and laundry expenses because you won't need to use your work uniforms. So they will be reviewing this area. Also, the ATO has claimed that people are claiming multiple working from home methods, so using the actual method for the period between March and June, as well as the 80 cents. So this is definitely on their radar. The ATO is also going to be reviewing the early release of super as taxpayers applying and while they have no changes to wages or employment information, or they're artificially arranging their affairs to contribute in super for a tax advantage. This could not only just trigger an anti-avoidance rules, but also result in additional taxes and impact eligibility for super co-contribution. Also, just to let you know, the super contribution amounts that you have withdrawn is not assessable income, and you do not need to include this in your tax return. The ATO has released a few frequently asked questions for COVID-19. So I have picked out a few in regards to rental properties. So they have advised that if you're providing reduced or temporary cessation of rent, then there is no reduction in rental property expenses deduction. Should you receive back payments or insurance refunds, this will be assessable income to the landlord. And any interest on deferred bank loans, the accrued amounts will be a deduction. Also, HECS threshold has changed. So the repayment income threshold was $51,957 in the 2019 financial year, and now has reduced to $45,881 for the 2020 financial year. And as you can see, it will increase in the 2021 financial year to $46,620. Corporate tax rates for base rate entities. For the 2020 financial year, the company must be a base rate entity to be eligible for the lower 27.5 company tax rate. So just a reminder what a base rate entity is. It has a company that has aggregated turnover of less than the threshold, being 50 million for 2020 financial year, and where 80% or less of their assessable income is base rate entity passive income, example rent, dividend, and interest. So the lower company tax rate will reduce for base rate entities to 26% for the 2021 financial year and to 25% for the 2022 financial year. For all other companies, the tax rates will not change. Instant asset write-off. The government has increased the write-off threshold from 30,000 to 150,000 on the 12th of March 2020 and has expanded the access on this date to include all businesses with aggregated annual turnover of less than 500 mil, which is up from 50 mil until the 31st of December 2020. So to obtain a deduction prior to the 31st of December, the asset must be installed and ready for use by this date. The asset may be new or it could be secondhand, and you can buy multiple assets. However, for motor vehicles, the instant asset write-off threshold is subject to the car limit, which is 57,581 for the 2020 financial year. This applies to the passenger vehicles, except for motorcycles or similar vehicles, which carry less than 9 passengers or carry a load of less than 1 tonne. Assets that are not subject to car limit threshold usually includes trucks and machinery. If the asset, for example, a car, is used for both business and private use, only the business portion can be claimed. So, for example, if you use a car for 75% business use, then the total that can be claimed is 75% of that value. Cash flow boost. So for anyone who has been receiving cash flow boost, your additional cash flow boost will start flowing through once you have lodged your June BAS. You receive this for the period between June to September 2020, and the additional amount that you will receive will equal the amount you have received from the initial cash flow boost, but split up evenly between activity statements. So if you are reporting on a quarterly basis, you'll receive 50% of the total initial boost for each activity statement that you will lodge, which is a June quarter and a September quarter. And if you are lodging monthly, you'll receive 25% of the total initial cash flow boost for each activity statement starting from June, continuing monthly to September. Just a reminder that the cash flow boost amounts received are non-assessable and non-exempt income. And also, the ATO is currently identifying schemes designed to create entitlements such as artificially restructuring businesses, wages, or inflating reportable withholding amounts and resurrecting dormant entities. JobKeeper. JobKeeper payments must be reported as business income in your individual return if you're a sole trader. For companies, partnerships, and trusts, you will report this as part of your business income. JobKeeper will be derived when the entity provides a valid completed business monthly declaration to the ATO. So this means that the JobKeeper payments for June 2020 will be derived in July 2020 and will be accessible in the 2021 financial year, as the June monthly declaration would not be completed until after 1st of July, and therefore that's why it's pushed to the next financial year. Superannuation. From 1st of January 2020, salary sacrifice super contributions can't be used to reduce super guarantee obligations, regardless of the amount the employee elects to salary sacrifice. A further change is that the super guarantee will be 9.5% of the employee's ordinary times earning base. The base is a sum of the employee's OTE and any amounts which would have been the OTE. So an example is Sharon earns $2,000 a week and has a salary sacrifice arrangement of $250 to her super fund each week. Sharon's salary only comprises of the OTE amounts. So from 1st of January, Sharon's employer must calculate the SG liability on her OTE base, which includes amounts that would have been OTE amounts had Sharon not salary sacrificed. So the calculation will be $2,000 times by 9.5% equals $190. So the amount that you would pay into Sharon's super fund will be $190 for the SGC, as well as the $250 that she's salary sacrificed. So just thought I'll advise a few changes that will be coming into effect for the 2021 financial year. So for Div 7A benchmark interest rate, it will be expected to go to 4.52 for the 2021 financial year, which is down from 5.37% compared to last year. Cents per kilometre method will be increasing to 72 cents per kilometre compared to 68 cents last year. And the car limit depreciation cost would be now $59,136 for the 2021 financial year compared to $57,581 for the 2020 financial year. Single touch payroll for closely held payees. So it was announced on the 22nd of April 2020, the exemption for small employers with only closely held payees don't need to report through the single touch payroll enabled software until the 1st of July 2021. Closely held related payee is someone's directly related to the business, company or trust that is paid. So there'll be family members, directors, shareholders of a company, beneficiaries of a trust. All other employees must be reported through single touch payroll unless you're an eligible micro employer who has 1 to 4 employees and you've applied for the reporting concession. The ATO has provided a list of STP compliant providers, which you can access through their website or through the link on the slide. Additionally, the ATO has ensured that there are low and no cost STP options available, which can be found through their website. So some key points for the end of financial year for STP. You are no longer required to provide payment summaries to your employees, but what you will need to do is make a finalisation declaration for each employee after the last payment. So the deadline for this is the 31st of July if you employ 19 or fewer employees, or 14th of July, which is obviously past now, if you employ 20 or more employees. So employees can obtain their income statement via MyGov or Taxation, and it will appear as tax ready once it's been finalised through the software. Payroll tax. So it'll be worth mentioning the payroll tax changes for the last couple of months. I apologise if anyone is from a different state or has businesses located in different states. However, today's focus will be on Queensland payroll tax changes. I want to just advise that JobKeeper payments are not liable for Queensland payroll tax. This is actually exempt wages. The amount for June that is paid in July will need to be included in the 2020 financial year per advice of the Office of State Revenue. So an example I have is Paula, who receives JobKeeper payments of $1,500 per fortnight for each of her employees, Adam and Michelle. So Adam has wages of $1,500 per fortnight, which is fully subsidised by the JobKeeper payment. Paula does not need to include that $1,500 for payroll tax purposes. And while she has another employee, which is Michelle, who's being paid $2,000 per fortnight, which includes a $1,500 subsidy and $500 in ordinary wages. Paula needs to only include $500 of those wages for payroll tax purposes. The $1,500 that she had received does not need to be included. Queensland Payroll Tax has also released a employment growth rebate available up to $20,000 for eligible Queensland employers who can demonstrate over a full financial year that they have an increase of full-time employees, i.e. the same compared to the same time last year. The rebate is calculated in the annual return and it is available from 1st of July 19 to 30th of June 2021, claimed per employer per year. The rebate is a lesser of either $20,000 or the amount of the relevant year calculated as follows. The annual payroll tax amount times by the net employment increase divided by the average total of all payroll tax employees. So if you have gone and lodged your annual payroll tax return with Office of State Revenue and you believe you should have adjusted for the above points that I have spoken about, you may be able to edit the return, but if you are unable to do this, you will need to contact them directly. They will either make that change for you or they will cancel a return that you have lodged, and so that you can log on again and resubmit the form. Also, I wanted to advise the thresholds have changed for payroll tax. So for the 2019 financial year, it was 1.1 million. This has now changed to 1.3 million for the 2020 financial year and will remain for 2021 financial year. So thank you for tuning in today, and if you have any queries or issues you would like to discuss, don't hesitate to contact me on the details that were provided on the earlier slide. I would like to provide a brief overview of how our business advisory team at Vincents can assist you with your tax and business or super requirements. As you can see on this slide, we have experts who can help you with business essential and business growth, private client solutions, super strategy advice, taxation consulting and compliance and secretarial work. We also at Vincents offer a range of accounting services, including insurance and risk advisory, corporate advisory, financial advisory, forensic services, insolvency and reconstruction and lending solutions. So if you need any advice or assistance in any of these areas, please do get in contact with me and I will be able to connect you to the relevant team. So thank you for joining me today, and please do not hesitate to contact me. Otherwise, have a nice day.